People don't care much about a stock price falling unless they own that stock. So it's highly likely you're here because you own one or more of these names, PayPal, Block, or Adyen. And we happen to be in the same boat. So today we're going to talk about first the performance of these firms. So they're all similar in that they're all large payment companies that are publicly traded. Here you can see a number of charts, and it doesn't matter really which is which. If you look at the chart in the bottom right-hand corner, that's the NASDAQ. So you can see that the other three charts show these other three firms, and they've all moved in the same direction, which is over the past year. They've dropped rather dramatically. Now, when we talk about price performance, we need to make sure we compare that to something so that it's relative. What we've done here is we've taken the price performance of these three firms, PayPal, Block, and Adyen, from October 14th, 2020 until today. Now, that date is relevant because it's the last time that we wrote about these firms, and I'll put a link to that research in the description of this video. So we've taken the performance, you can see that there on the left. Then we've added to that, or let's say taken into account, the performance of the exchanges these stocks trade on. So because NASDAQ happens to be where PayPal trades, the return of that index is relevant. And you can see that's posted there at 0.65%. Over that same time frame, the New York Stock Exchange returned 14%, and Adyen trades on the Euronext 100, and that exchange returned around 20%. So then you need to take that opportunity cost into account. Then you can see on the right-hand side here, we have the adjusted performance for all three of these firms, PayPal, Block, and Adyen. We can see that PayPal and Block have performed meaningfully worse than Adyen over that 19-month time frame. Now, we don't like to look at short-term share price performance, but we'll talk about why this is relevant. So another way we can benchmark the performance of stocks is by looking at thematic performance. So these are three FinTech stocks related to the payments theme. So what we can do now is we can look at the two FinTech ETFs out there, the most popular ones, Global X FinTech ETF, which is a passive index that is weighted based on market capitalization. And then we have ARK's ETF, which is a actively traded ETF that tries to beat the market. And we can see here that Block happens to be ARK's biggest position at the moment. And they also happen to have added Adyen as well, which is seen there in position number 9. Now, ARK used to hold PayPal, but they recently switched over to Block for Bitcoin exposure. Now, that's actually a problem because here's a look at the last quarterly report from Block. You can see here that the firm counts Bitcoin revenue, we've highlighted there, and then you can see Bitcoin costs, we've highlighted that as well. They count the purchase of Bitcoin as revenue. Now, that is deceptive because individuals that are speculating on Bitcoin shouldn't be considered part of the normal transaction-based revenues that a payment provider would be considering. So you can see here that because speculation in Bitcoin dropped dramatically, the overall revenues from the first quarter of 2021 to the first quarter of 2022 have dropped 21.7% for Block. But if we remove Bitcoin from the equation, we can see their revenues actually grew by 44%. So the fact that Block includes Bitcoin revenue in their financials makes it very difficult for investors to see what's actually happening with the firm. That's probably one of the biggest reasons that we would never consider investing in Block. Now, when you look at the total percentage of revenue, it was 57% of the revenues in 2021, 48% in 2020, so it's growing. But when you look at the growth contribution, 67% in 2021, 85% in 2020, that also needs to be taken into account because the growth of Bitcoin speculation is different from the growth of transactions on the platform, such as the type you would see coming from PayPal or Adyen. Now, the gross profit that's generated from Bitcoin is very small. You could see that 5% of the gross profit that Block realized in 2021 came from Bitcoin, even though it accounted for more than half of total revenue. So including Bitcoin revenue as a percentage of their revenues is deceptive because it it doesn't allow you to sufficiently compare the three companies using apples to apples comparison. So when we look at that Bitcoin exposure, there's really two components. It's the speculators trying to buy their way into a better zip code, or it's a payment system that uses Bitcoin to transact, which is the Lightning Network that Block recently implemented. And it's one of the reasons that ARK said they sold PayPal and moved into Block, is because they were bullish on the Bitcoin. Now, when you look also at the exposure Block has to Bitcoin on their balance sheet, this was a chart taken from Quartz. The data is from early 2022, and it shows that Square invested $220 million in Bitcoin, and they're currently holding that on their balance sheet. Now, we don't believe it's the responsibility of company executives to be speculating on any sort of commodity or cryptocurrency or asset. It's their job to run the company, and we believe that Square, what's now called Block, shouldn't be speculating on Bitcoin. Others see that as a value add. We don't. Perhaps the worst example of a firm that does this is MicroStrategy. That's a Bitcoin company with a software problem. So they actually sell a software product, but all the CEO does is go around talking about how great Bitcoin is. Now you can see that they've shown the gains and losses here, and those are irrelevant, because if we want to speculate on Bitcoin, we'll go buy some Bitcoin at Coinbase. We don't want to buy a half-ass software company along with a Bitcoin holding. So people need to keep in mind when they're looking at firms that hold Bitcoin or other assets on the balance sheet, the exposure that they're getting with those. Now, when we compare these three firms in terms of total payment volume, this is a pure metric that we can use to see the volume of market share being captured for payments. So the money that's flowing through these payment gateways. PayPal, 2021, $1.25 trillion through their platform. And then you can see Block in this past year had 168 billion, and Adyen with 590 billion. When it comes to the growth, so Adyen grew 110% from 2019 to 2021, while Block only grew 60%, and I believe PayPal was around 70%. So this is a key metric to watch because it shows market share captured. So the more volume that they can capture, the more data they have, the more valuable their platform becomes because of the network effect. Now, when we look at valuation of these three firms, so PayPal, this is simply taking the market capitalization and dividing that by annualized revenues. It's called our simple valuation ratio. PayPal comes in around 3.6, Adyen at 6.3, and Block at 3.1. Now, if we backed out Block's Bitcoin revenues, they would actually be around 5.5, so more in line with Adyen. But it's worth noting that all three of these firms are valued quite low based on what we've seen historically using this ratio. Now, when we look at Adyen's international revenues, this is one of the reasons why we invested in this firm to begin with. We like the fact that they're not solely reliant on the US customer. So while PayPal has had just over 50% of their revenues coming from the United States over the past 3 years, Adyen has a much better breakdown in terms of where their revenues come from. So you could see EMEA stands for Europe, Middle East, and Africa. So 60% of the revenues come from that region. Then North America, which is growing the strongest of these four regions. Then you have APAC and Latin America. So this geographical diversification helps to minimize the sort of fluctuations you might see in revenue growth that are a result of certain things happening. So the American consumer perhaps tightens up their purse strings. That would affect PayPal more than it would affect Adyen. But of course, we also have the Europe problem to consider, and Adyen has more exposure to that than PayPal. So just to conclude, in regards to all these three firms, we believe Block is tough to monitor because of the crypto noise. We don't see that as a firm that we would ever invest in. Adyen showing the strongest payments volume growth. It's a firm that we've already been invested in now for coming up on 2 years or so. And the question is, would you switch out the laggard with the leader, which is PayPal? Because you always want to be holding leaders in any particular theme. Well, That remains to be seen. It would probably take a little bit more digging to see, now that PayPal has floated back down to earth. Perhaps the ARK effect has resulted in the price being a little depressed as ARK has sold their shares. It's probably worth digging a little bit to see if PayPal would be a worthy, let's say, replacement for our Adyen holding, although we continue to be quite suspicious of their US-centric approach. So over the past 3 years, the trend just simply remains the same. It's around 52, 54, 53% of revenues coming from the US. So that's about all that we have to talk about today when it comes to payment stocks. Please leave your comments in the comments section. We'll address them there. Make sure to subscribe to our channel. Thanks so much for taking the time to listen to this presentation today.